Alright guys, welcome back to the channel. Today is episode 74 and we have a couple of things that we want to go over in this video. The first thing we're going to take a look at the fact that war seems imminent in the east, with tensions between Iran and Israel. As you guys can see on the screen right now, this article says Iran will learn from its failed attack on Israel and work to make the next big attack more devastating, war analysts warn. So pretty much everyone's warning Israel not to respond. They struck first, it seems. Iran finally responded and told them, hey, if you guys don't respond, we'll squash it, we'll leave it there. Israel seems like they're bent on retaliating, and the whole story just seems crazy. We know Friday there was a big concern about what was going on over there, and because of that, the market kind of like sold off. Today sold off again because on Saturday Iran orchestrated an attack against Israel for the first time. Now, I was listening to this war expert speak, and he said that it looks like they weren't even trying to do any kind of damage. They were sending those drones like real slow with like a formation of like 300 of them, and it was just to kind of send a message like, yo, we could reach out and touch you, but if you want to push it, we could take it to the next level. So it says here Iran's retaliatory attack consisted of over 300 missiles and drones. I can just imagine the skies probably look like Independence Day. Crazy. And this happened Saturday night. Even the president has said, hey, we're not backing this. So Biden said that, if you guys decide to strike back, we're out. We're not in this. So who knows where it's going to go. But today we're going to take a look at how you can create a hedge against, this impending war if it occurs. Because as you guys know, if you were investing around the time when the Ukraine war broke out, it's kind of the same thing. This one's a little bit more serious because, Israel has a bunch of friends, and, the guys in Iran, they ain't no joke either. You know what I'm saying? So this could potentially go bad. So there's two main ways that you guys can create a hedge. I'll go ahead and throw this up on the screen for you now. But one of the first ways you can obviously create a hedge for your account is by playing options. So in my particular case, I'm actually playing options to the I'm playing options to the downside. So, if everything is sliding, I'm betting that, listen, this is the direction that it's going to go, and I'm playing options that way. So I'm playing puts pretty much. I know a lot of people are not comfortable with playing puts. That's fine. You can also play calls, but what you have to look for is companies that will benefit from a war. I've put together a list for you guys. It's up on the screen right now. And these are just a list of some of the companies that came to mind before I did this video that pretty much their business is war. So we have, the first one is HAL, which is Halliburton. Then we have LMT, which is Lockheed Martin. We have KTOS, which is Kratos. We have RTX, which is a bunch of companies that came together. One of the main companies in this setup is a company called Raytheon. They have some real lethal like missiles. Dangerous, really dangerous company. Then there is this other one called CDP. I think they rent military style facilities. And obviously you guys know BA, which is Boeing. A lot of people know them for commercial flights and commercial planes, but they actually do a lot of military stuff. And then we have ITA, which is an iShares defense ETF. And if you guys don't know, iShares is owned by BlackRock. They're also heavily invested in the war that's going on in the Ukraine right now. And then we also have another one, which is called PPA, which is another ETF that's based around defense. So you guys can, get in on shares on this, or if you know how to play calls, you could play calls that way. On these particular stocks, you probably wouldn't be playing puts, because if the war kicks off, these stocks will probably go up. The regular stocks you want to play puts on are the normal stocks that are not that would be affected by people pulling their money out the market. Regular Microsoft, just regular stocks. Another set of stocks, I didn't put it up on the screen But you could also take a look at gas companies because remember, Iran is in an area where there's oil. So, if they have strikes going back and forth, we might have oil refineries being hit. And if, let's say they were producing from 10 refineries and two got damaged, now they're producing from eight, they're going to mitigate the cost to cover up for, the two lost facilities. So take a look at stocks like XOM, which is ExxonMobil, and then you can also take a look at another stock, which is OXY, which is Occidental. So those are just like two oil stocks, but there's a host of those. Are just speculation, like I said. If direct war breaks out, these stocks that are on your screen right now are the stocks that primarily will benefit from war. Now we're going to go ahead and dive into Robinhood, and we're going to go ahead and take a look at my play today on SPY. As you guys know, I've been hedging on SPY, just trying to make extra money while everything else is down. SPY kind of represents like the overall market. It's one of the ETFs that you could pretty much invest in this if you don't want to manage like a portfolio and just, like set it and forget it. So I've been playing puts on SPY, as most of you guys know, and today was no different. So we're going to go ahead and hop into the charts. All right, so if you guys look on the screen right now, you'll see my plays on SPY today. So first up, let me just zoom in. So one of the first things that caught my interest this morning was this huge gap up. So I went ahead and marked this area with a circle. Usually, like I told you guys before, whenever price goes up and gaps up like this, usually it's going to find its way back down to fill this gap. All right, so it gapped up around here, right? And this was right around like, this morning market opened up. It started going up and down, consolidation here. We already had these two channels set up. So we're looking for it to break out of this area where it's consolidating, and then for a continuation to the downside. So also had another channel here that it kind of played in, dipped in twice in here. So I drew a line on that. It eventually broke out the line, and we got in right around here where I got confirmation, and I'll zoom in so you guys can see. So I got in on the 513 put, and I got 3 contracts at 1.29. So $1.29 per contract, and it starts to slide. As you guys can see here, we have some huge David banner candles. We have 1, 2, 3, 4, 5. So 5 David banner candles in a row. And it comes down to this channel, right? And it dipped in here, bounced back up with a green candle. Most people get nervous and sell here. You got to try and, hold it together. You could take profit here because this, if you bought here, you made some nice money. So we expect it to go up. It did. Came back down. Boom. Touched the area again. Came back up. But this time it formed a lower high here. Then we had a little run. Still held it together. And after that, it came back down. Touch inside the channel. Came down. Broke. And then this line here goes back over to the area where the gap up was. So I was looking for it to touch this area or get close to this area to take some profits. So if I move the screen up here, you guys can see at this point, I sold 2 of the contracts, and I sold for 2.36, so $2.36. So I bought the first, the 3 contracts at 129. I sold 2 at 236, came back down, broke out of this little area here, came back up, touched it, came back down again, and broke this line. So I ended up selling the final contract here for $2.51. And then at that point, I was up like around, I would say about 86% ROI. So I stayed out, did some consolidation, stayed in this area, was respecting it for a while, and then came back up above this area, consolidation, respecting it, boom, broke down. And I was watching it, and I was like, let me jump in here. So I made my position a little bit smaller. So this time I jumped in with two contracts at 0.77, and I ended up selling both contracts when it got down to here at $1.02. So got in at 0.77, sold at $1.02. Kept running, came over here, consolidation again, and then boom, massive sell down. I actually didn't catch this. I was in the process of like doing some stuff, but when I saw it broke out of that line and went below the gap area, consolidating, I was looking to see if I could make one more play. So it kept going, kept going, kept going, and I got in somewhere around here. I didn't mark it, but I got in with just one contract, and I made some money again on that. So we're gonna now hop into Robinhood and just look at the receipts for the day on SPY. All right, so here we go. We have the receipts pulled up today for the plays that I did on SPY. As you guys can see, the first put that I tried to buy the 514 put expiring today, but that wasn't filled, so it got canceled. And then I went back in with a 513 put, and I got three contracts at $1.29. We ended up selling two contracts, like I showed you guys on the charts, at 236. And then the final sell, I end up selling for 251. Then we go up here and we have a buy. So I went ahead and I got two contracts of the 509 put, and this was at 0.77 for a total of 154. And then I end up selling those two for 204 at 1.02. So I end up making roughly about $50 on this one. So on the previous one I made like 336, and then this one I made 50. So at that point I'm up like around 386. And then I got another one here at 0.92, and this was the 508 put. This was $92, and then I end up selling that for 135. So I think I made like 43 bucks on this one. So in total it was like 4 and change, like 420 or something like that. I was about to do it again, and then it didn't go through, and I was like, you know what, all right, that's enough. I looked at the time, it was getting close for me to get ready to go to the gym, so I was like, good, I'm out. I made like roughly around like 400, I think, for the day. I'll throw the number up on the screen right now so you guys can see. But this is a successful day, and the reason I say that is recently with the choppiness of the market, I've been trying to get like 250 a day. So today was good. I got somewhere around like 400. Typically when I get money on options, I use this as a hedge. So what I'll do is, in something like this, let's say I made like 400 today, I'll probably take 200 and buy different stocks. I buy like 8 different stocks, $25 a piece, just averaging into companies that I plan to hold for the long term. I'll probably take 100, pay myself, and then the other 100, I'll put it back into my working capital. What is your working capital? Your working capital is the money that you're using to trade. So the more working capital you have, the bigger your purchases can be. Bigger purchases, bigger profits. So that's typically how I do it. The other thing I wanted to touch on today, we had a question from one of my viewers. The question was pretty much, hey, what do you think is going to happen this week? It all depends on the direction of the war. But right now, as you can see with the markets, everything is looking crazy. If you go back and you take a look at SPY, this is your clear indication of how the market is going. Just look at SPY for today. It started at what, 512 at its peak. It was 514, somewhere around there, 515. That's just at market open. And then I'm sure, I haven't been following the news, but I'm sure just bad news, or those guys are talking smack between each other. Oh, we're gonna blow this up, we're gonna blah 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 blah, and it just generally starts to slide. So when it starts to slide, there's a couple of things that you could do, Ebony. You could play options if you know how to play options, so you can make some extra money. Play the regular stocks to the downside. play those defense stocks when they start moving to the upside, make money that way. The other option too, if you're a long-term investor, because I long-term invest, so I trade options to make money for my long-term investing, then you start to average yourself into those stocks that you own, the companies you believe in, good blue chip dividend paying companies, companies that grow, Microsoft, IBM, Meta, Coca-Cola, Apple, good companies, good solid companies that have been around for a while. Because those companies, yes, they'll dip, but the dip is temporarily. And when you buy during that dip, that's when most of your wealth is made, during the dip. You hear the saying, buy the dip, it's for real. So try to, look at what's going on. I know it's not good. War is never good. Innocent people get killed. There's bad blood on each side. And especially this type of war with the whole religious thing, it gets crazy. So hopefully it doesn't go to that level. But if it does, like I said, you want to create a hedge against, what's going on for your portfolio. And the best way to do it was with options, buying these stocks when they're on discounts, and invest in the companies that will benefit from war. All right. And that's it for the video today, guys. I hope you found this information useful. If you did, please consider subscribing. Go ahead also and like this video. I'm trying to get this video to like 100 likes, and share this video with a family member or friend. Thanks again for watching the video. I really do appreciate it. Y'all have a blessed day. Peace.